Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine a world where every advertisement, every recommendation you encounter feels less like a billboard and more like a whisper from a trusted friend. Genuinely useful, never creepy, always perfectly timed.
Right. A place where brands don't just collect your data, they truly understand you, anticipating your needs before you even maybe realize them yourself, all while respecting your privacy.
Exactly. This isn't some far-off fantasy from a futuristic novel. It's the audacious, groundbreaking goal of a company betting its entire future on artificial intelligence to fundamentally redefine how businesses connect with their customers. Today, we're asking the electrifying question. Is this company the quiet force, the dark horse poised to revolutionize marketing as we know it, leaving established giants scrambling in its wake?
Or is it maybe just another flash in the pan, in this incredibly competitive tech landscape? It's a huge question.
It really is. We're about to pull back the curtain on the powerhouse at the very heart of this transformation, peeling back the layers of its ingenious business model, its visionary leadership, and, crucially, its colossal potential for your portfolio.
Our mission today really is to equip you with the essential understanding you need. Is this rapidly growing entity the right fit for your next significant investment move?
We'll navigate its triumphs, its potential pitfalls with absolute clarity and maybe even, a touch of the extraordinary. Now, in any enterprise, especially one operating right there at the cutting edge of technology, the architects behind the ambition, the leaders at the helm, they're often the truest indicators of future success, aren't they?
Absolutely. You can have the most groundbreaking technology, the largest addressable market, but without the right visionaries steering the ship, it's just, it's a vessel adrift.
So true.
And what's crucial to understand about Zeta Global's leadership team is that it's not just a collection of impressive resumes on paper. It's a remarkably powerful blend. You've got entrepreneurial genius, real technical wizardry, and just sheer sales dominance all rolled into one.
It sounds like quite the combination.
It is. This isn't merely about putting names to faces. It's about dissecting the synergy that drives their incredibly ambitious vision and how that directly translates into market performance and, ultimately, value for you.
Okay, so let's start right at the very top. David A. Steinberg. He's the co-founder, chairman, and CEO. And saying this isn't his first rodeo, that's a monumental understatement.
Oh, definitely not. Picture a serial entrepreneur who didn't just build one, but multiple billion-dollar companies before even laying the foundation for Zeta back in 2007.
Like which ones?
We're talking about Sterling Cellular and Infonic. Both hit that coveted unicorn status under his guidance. His real superpower, his distinctive edge, it seems to lie in this almost prescient ability he has to spot gaping holes in the market.
And then fill them.
Exactly.
Yeah.
And fill them meticulously with ingenious data-driven solutions. At Zeta, he's the undeniable mastermind behind what they call the Zeta Marketing Platform, the ZMP.
Right, the ZMP.
It's this unified ecosystem designed to stitch together all those disparate customer data points for hyper-personalized marketing at a scale that was, frankly, previously unimaginable.
And those acquisitions, Boomtrain and Sysmex.
Critical. Boomtrain in 2017, that brought the AI muscle. Sysmex in 2019 delivered serious ad tech firepower. These weren't just bolt-ons. They were calculated, really transformational moves that fundamentally reshaped the company's trajectory.
So his influence is massive then.
Profound, almost singular, you could say. He commands a significant 53.7% voting power. That effectively grants him near total control.
Wow, 53.7%.
Yeah, it means his visionary blueprint isn't just consulted. It drives every single strategic decision, from multi-million-dollar acquisitions right down to the daily operational cadence.
That ensures focus, I guess, but maybe relies heavily on one person.
That's the trade-off. Incredible, unified, agile direction, but also immense strategic reliance on one individual. There's a telling anecdote from 2021 around the IPO.
Oh, yeah?
Steinberg reportedly faced a room full of skeptical investors. He didn't send someone else. He personally pitched Zeta's then-nascent AI edge. He laid out this vision so compellingly it apparently swayed the room, leading directly to that $1.7 billion valuation at the time.
That says a lot about his conviction.
It really does. His persuasive power is undeniable.
Okay, so moving to the financial side. Christopher Greiner, the CFO, the numbers guy.
He's absolutely the numbers maestro you want in your corner if you're building a high-growth tech firm. Over 2 decades of intense tech finance experience, he navigated the high-stakes waters at places like LivePerson.
Right, I remember him there. He doubled their market cap, didn't he?
He did. And also Inovalon, a big player in healthcare data. Since joining Zeta in 2020, Greiner's been instrumental, not just streamlining costs with surgical precision, but also fueling strategic M&A.
Including that big Live Intent acquisition last year.
Exactly, $250 million. That vastly expanded Zeta's reach and capabilities. His impact is remarkably transparent, widely lauded. He's known for the clarity he brings to investor presentations.
That definitely helps with stock appeal.
Analysts universally agree it has significantly boosted Zeta's stock appeal and investor confidence. And here's a concrete example. His shrewd decision to refinance Zeta's debt in 2023.
At lower rates.
Substantially lower rates. It didn't just save a few pennies, it freed up a cool $10 million annually. Straight to the bottom line. Analysts literally hailed it as textbook brilliance. It shows his ability to turn complex financial maneuvers into real, tangible value.
Okay, finance covered. What about the tech, the AI magic?
That brings us to Christian Monberg. He's the CTO and head of product. And crucially, he was a pivotal co-founder of Boomtrain.
The company they acquired for its AI? Makes sense.
Exactly. For over a decade, Monberg's been consumed by what he calls predictive personalization. These are algorithms so advanced they seem to anticipate your next purchase, your next click, sometimes before you even consciously know you want it.
Sounds a little spooky, but powerful for marketing.
It's extremely powerful. His team recently launched the AI Agent Studio in March 2025. This isn't just basic automation, it's a leap forward. It automates complex marketing workflows with astonishing precision.
And his background helps scale us globally.
Absolutely.
Yeah.
His time at Akamai, honing skills and scaling global tech platforms, is critical for Zeta's huge ambitions. It's one thing to build a great algorithm, it's another to deploy it across billions of identities worldwide.
True.
And here's a fun fact that kind of encapsulates his drive and Zeta's culture. He apparently once coded a prototype for their CDP plus the customer data platform during a lightning-fast 48-hour hackathon.
No way.
Yes. That raw prototype didn't just impress, it directly led to his fast-track promotion.
Yeah.
It really speaks volumes about their culture of recognizing and rapidly rewarding impactful innovation, outside the usual timelines.
That's a great story. Okay, one more key player. Don Steele, Chief Revenue Officer, the sales titan.
That's the perfect label. This guy has an uncanny ability to translate cutting-edge tech into tangible revenue-generating dollars. He spent a decade at Epsilon.
Epsilon, right. Huge growth there.
Orchestrated staggering growth, from $250 million to $2 billion in revenue. He joined Zeta in 2017 with one clear mandate: supercharge enterprise sales.
And his strategy.
Relentlessly aggressive, spectacularly effective. He systematically targets Fortune 500 clients, securing those multi-year contracts with behemoths like Samsung, Toyota, locking in predictable, long-term revenue for Zeta.
Any big wins that stand out?
His team closed a single $50 million deal with a major retailer in 2024. How? Primarily by leveraging the ZMP's real-time personalization to show an immediate, quantifiable ROI.
$50 million from one deal.
Yeah. Colleagues joke, maybe with a bit of hyperbole, that Steele could sell ice to penguins and probably negotiate a multi-year service contract to go with it. That's the kind of relentless drive a company growing at Zeta's pace thrives on.
So let's tie this leadership team together for you, the investor. What does it all mean? It's founder-led, clearly, by Steinberg.
Unequivocally, that 53.7% voting power makes him the ultimate kingmaker, ensures a singular vision. Now, John Sculley, the former Apple CEO and a co-founder here,
He stepped back from the board recently.
transitioned from the board in June 2025, yes. But he thoughtfully remains vice chairman emeritus, so he's still offering strategic counsel. His departure did spark some whispers online, questions about leadership transition beyond Steinberg. But for now, Steinberg's firm grip ensures a clear path.
Which brings up that crucial question. Is Steinberg indispensable, like a Musk, or a brilliant CEO who could eventually be replaced?
That's the multi-billion-dollar question, isn't it? His track record building $3 billion companies before Zeta speaks volumes about his unique genius. But that highly centralized control does raise valid questions about long-term scalability and, critically, succession planning.
It's that double-edged sword again.
Exactly. Immense agility now versus potential vulnerabilities later. It's a factor every investor needs to weigh very carefully.
Okay, let's talk alignment. How are these executives incentivized? Their compensation structure?
It's really a masterclass in aligning executive interests with shareholder value. Heavily weighted towards equity compensation.
Meaning their wealth is tied to the stock price.
Directly tethered. creates an undeniable incentive for long-term sustainable growth. Look at Steinberg's 2024 package, over $26 million, but the vast majority, over 80%, was stock awards.
And others are similar?
Griner, over $10.8 million, 80% equity. Stephen Gerber, the president and COO, over $12.5 million, again, overwhelmingly equity heavy. Their skin is deeply in the game.
How does Steinberg's stake look?
His voting shares alone are currently valued around $1.8 billion at today's prices. It's a massive personal investment.
How does that compare to peers, say HubSpot?
Zeta's payouts are notably higher than, say, HubSpot CEO Yamini Rangan's $15 million package in 2024. But they're generally seen as justified by Zeta's aggressive high-growth stage. You need to incentivize that kind of explosive expansion.
What's the risk there? Stock drops, morale drops.
That's the inherent risk. But Zeta's impressive 40.3% year-over-year revenue growth in 2024 provides pretty compelling evidence that these executives are consistently delivering on those ambitious targets. The results seem to justify the structure for now.
Let's move beyond the individuals then, into the soul of the company, mission, vision, culture.
Right. Their mission statement is elegantly concise, but profoundly ambitious. To make sophisticated marketing simple by unifying identity, intelligence, and activation.
So basically cut through the Martech complexity for brands.
Precisely. Demystify that often Byzantine world, translate immense complexity into intuitive, actionable tools like the ZMP.
And the vision. Steinberg wants it to be the AWS of marketing.
That's the articulation. The indispensable go-to platform for enterprises looking to accelerate growth and enrich customer connections at scale. It's an incredibly ambitious goal, positioning Zeta not just as a vendor, but as foundational infrastructure.
What about the culture that drives this?
It's characterized by a relentless drive for innovation, a profound commitment to inclusion, and this almost palpable sense of hustle. They foster a vibrant environment with active employee resource groups. Zeta Pride for LGBTQ plus employees, Wing for women.
High Glassdoor ratings too, I saw, 89%.
Exactly. It reflects a positive internal environment. And there's a delightful anecdote from 2023 where Steinberg reportedly gifted every single employee a personalized AI-generated thank you note.
That's pretty cool. Showcases the tech and the team spirit.
Right. It showed their tech prowess, but also, crucially, that deep commitment to the team. Their Be Curious mantra isn't just a slogan. It actively fuels their significant R&D, with a full 20% of their staff dedicated exclusively to AI development.
Okay, but no company scales this fast without hitting some potential turbulence. What are the big risks here?
Definitely. One significant structural challenge is that over-reliance on Steinberg. His concentrated voting power, while driving action, creates a single point of failure. If he steps down for any reason,
Investor confidence could take a hit.
could certainly experience a significant tremor. Questions about continuity, leadership depth. Then there's the ever-present specter of regulatory scrutiny.
GDPR, CCPA. It's a minefield.
It's a relentless, intricate dance with these evolving global data privacy laws. A single misstep could mean hefty fines, potentially up to 4% of global revenue, or severe reputational damage.
And the talent wars. Competing with Google and Microsoft?
Absolutely relentless. They're locked in a fierce battle for top-tier AI and tech talent. Their New York HQ helps tap a diverse pool, but Silicon Valley's gravitational pull remains incredibly strong.
And Scully's transition, even though he's still emeritus, caused some ripples.
Minor ripples, yes. It sparked some chatter on social media, questioning the leadership depth beyond Steinberg, even if his role was primarily advisory by then. It just adds to that succession question mark.
So comparing Zeta's leadership to the established giants, Adobe's Narayan, Salesforce's Benioff, what's the key difference?
What immediately stands out is Zeta's almost scrappy, pure entrepreneurial spirit. Steinberg's serial founder status mirrors Benioff's early career, while Zeta's exec team might not have that global brand recognition yet.
Monberg's AI expertise and steel sales skills are top tier.
Unquestionably. They stand toe-to-toe with the best. Zeta's younger public market 10-year IPO in 2021 means they're perhaps hungrier, more agile, less burdened by legacy.
But also less battle-tested through major downturns.
That's the other side of the coin, less battle-tested in severe macroeconomic storms. This blend of experience, agility, and relative newness is a critical factor for you as an investor to consider.
Okay, let's shift focus now from the architects to the engine room itself. Zeta Global's business model. It sounds incredibly sophisticated.
It is. A high-octane blend of AI, big data analytics, omnichannel marketing, all meticulously designed to help brands not just cut through the noise, but truly command attention.
So boil it down for us. What's the core business?
At its core, it's elegant in its simplicity. Empower brands to truly understand their customers on a granular level, and then market to them with unparalleled intelligence. Think of it like this.
An analogy always helps.
Imagine a supremely gifted librarian. Not only organizes every book perfectly, but also has this uncanny ability to predict exactly which book you'll want next, even before you realize it. That, in essence, is their Zeta marketing platform, the ZMP.
So it collects data, analyzes it with AI.
Tirelessly, vast streams of customer data, analyzes it with powerful proprietary AI, and then, at the absolute perfect moment, delivers those hyper-personalized ads or emails.
For non-techies, it feels like a magic wand for marketing. But underneath, there's jargon like CDP, ESP, DSP.
Right, intricate algorithms, massive data pipelines. But Zeta masterfully simplifies this for clients with intuitive dashboards that belie the immense power underneath. For you, the investor, grasping the underlying how this tech works is crucial to appreciating its deep competitive edge.
Okay, another analogy.
Think of Zeta as a master chef, meticulously blending raw ingredients that's the mountains of customer data into gourmet, bespoke dishes, the perfectly tailored marketing campaigns that consistently delight the diners, the brands, and deliver impressive returns.
Got it. Let's talk about the crown jewels then. The products and services within the ZMP. First up, the CDP plus flip.
The customer data platform, yes. This isn't just collecting names, it's creating a true 360-degree unified customer view, stitching together every conceivable data point: emails, purchases, social media, website clicks.
How do they stitch it all together accurately?
Sophisticated identity resolution algorithms, leveraging machine learning to identify and unify disparate data points across channels and devices, phone, laptop, even in-store interactions. It's complex work.
Any examples of its impact?
Sure. A major retailer recently used CDP Plus to precisely identify 3 million in-market pet owners based on their online and offline behaviors. Result: a direct 15% boost in pet product sales. Real, tangible, measurable impact.
Impressive. Okay, next. The ESP email service provider.
Right. This isn't your grandma's bulk email sender. It's about sending AI-optimized emails with uncanny timing and content. A prominent travel brand, for instance, used Zeta's ESP.
And saw better open rates.
An incredible 20% higher open rate, simply because the AI knew exactly when and what to send to individual customers to maximize engagement.
And the DSP, demand-side platform, managing paid media.
Exactly. Across TV, social, web, it dynamically manages ad spend, meticulously optimizing placements to maximize ROI. A CPG brand actually managed to cut their ad spend by 10% while simultaneously increasing conversions. Pure marketing efficiency.
That's compelling. How's their product market fit overall?
Exceptionally clear and robust. Over 1,000 enterprise clients across 15 diverse verticals: finance, retail, automotive are big ones. And that 90% client retention rate. That tells you how sticky the platform is, how hard it is for clients to leave.
Are they innovating? What's new?
Absolutely not resting on their laurels. That AI Agent Studio launched March 2025. It automates incredibly complex tasks like campaign optimization, budget allocation, reportedly saving clients up to 30% in labor costs.
And more AI coming.
They've publicly announced plans for even deeper generative AI integration by 2026. Signals continuous innovation.
So what makes Zeta truly unique in such a crowded market?
It really comes down to their all-in-one platform approach. It stands out dramatically against point solutions, those companies just doing email or just analytics. Zeta provides the fully integrated ecosystem.
Like Jim Collins' hedgehog concept. Focus on what you're best at.
Precisely. For Zeta, what they're undeniably best at is unifying customer identity, intelligence, and activation. Their economic engine. Predictable subscription revenue from long-term contracts. And their passion, empowering brands to forge truly meaningful connections.
You mentioned a bank case study.
Right. A global bank, struggling with a fragmented marketing tech stack, used the ZMP to consolidate everything. The result, they cut their marketing tech cost by 25% and increased customer lifetime value by 18%. That deep systemic integration isn't just convenient.
It creates that competitive moat.
Exactly. Incredibly difficult for any competitor to replicate without first matching Zeta's colossal 2.4 billion identity database. That's a barrier of Herculean proportions.
Their history shows quite a bit of evolution too, right? Started as Excel marketing?
Yeah, back in 2007, focused on email, then a decisive rebrand in 2016 to Zeta Global, pivoting sharply to AI and data. 2017 to 2019 saw those key acquisitions boom train, Sysmex assembling the ZMP building blocks.
Then the IPO in 2021.
Right. $1.7 billion valuation raised over $302 million in fresh capital to fuel more aggressive growth. And by 2024, revenue hit $1.08 billion, up a staggering 40.3% year-over-year, with free cash flow reaching a robust $125.7 million.
Was the Sysmex acquisition the real turning point?
It was certainly pivotal. Gave him that powerful DSP, allowing him to compete directly with giants like Adobe and ad tech. And their adaptability showed during the pandemic, too. Accelerated cloud migration cut costs by 15%. Shows agility.
Let's talk global operations. HQ in New York.
Nerve center for strategy and sales. But a truly global footprint. 15 offices in 11 countries. Silicon Valley for R&D, London for Europe, Hyderabad in India for data and tech support.
And they control the whole tech stack. Vertical integration.
Critically important. They meticulously control everything from raw data collection right through to campaign execution.
What's the advantage there? Lower costs, faster innovation?
Both. Massive advantages. Their proprietary database processing those 2.4 billion identities, all in-house, reduces data latency by an incredible 50% compared to a hybrid model relying on third parties. It's a level of control most competitors just don't have.
How do they fuel all this growth? Distribution?
Multi-pronged attack. A formidable 200-person direct sales team targets large enterprises, securing those multi-year contracts with brands like Verizon.
Plus partnerships.
Strategic partnerships with leaders like Snowflake, Accenture, LiveRamp expand their reach. That 2024 Accenture deal brought in 50 new enterprise clients almost instantly.
And they use events, too. Zeta Live.
Skillfully leverage innovation showcases. Those virtual summits aren't just marketing. They consistently drive about 20% of their new leads by demonstrating the ZMP's power.
And the SaaS model means predictable revenue.
Incredibly reliable stream. 80–90% from those long-term contracts. A 3-year deal with a major insurer, for example, guarantees $15 million annually. This predictability stabilizes cash flow, allows them to hold that healthy $364.4 million in cash reserves. A powerful war chest.
Okay, but there have to be storm clouds. What are the big threats?
Always. First, the technological imperative. They have to keep their algorithms ahead of the curve, especially with generative AI advancing so fast. If R&D lags, nimbler players could outmaneuver them.
Regulatory compliance.
A perpetual concern. Complying with GDPR, CCPA, India's DPDP Act. It's complex, high stakes. Violations mean massive fines, massive reputational damage.
Geopolitics. Economic downturns.
Geopolitical tensions, like U.S.-China data restrictions, could disrupt Asian ops. And yes, recession could shrink marketing budgets across the board, maybe 10–15%, hitting Zeta's top line.
But you mentioned they're built to be resilient, anti-fragile.
This is where their architecture shines. Their subscription revenue, diverse client base across 15 verticals, strong free cash flow, $125 7 to 7. These provide significant buffers.
Like during the 2022 ad slowdown.
Exactly. Many competitors faltered. Zeta still grew revenue 32% by targeting cost-conscious brands seeking efficiency, and their cloud-native AWS platform ensures scalability and uptime. It's a modern built for disruption.
So overall, a robust, integrated, resilient model designed to capture market share.
Precisely. An incredibly resilient player in an increasingly complex digital landscape.
Let's talk about that fortress then. Their competitive advantages, the moat. They aren't a monopoly.
Not a monopoly, no. But they command a formidable position in CDP and DSP markets. Around 5–7% share of that massive $500 billion total market.
And that 2.4 billion identity database is the key barrier.
It's monumental, almost insurmountable. Imagine trying to legally acquire, standardize, deduplicate, resolve data from billions of global sources, build the AI, and comply with all privacy laws.
Decades and billions of dollars.
Easily. Few startups could even dream of it. It's not just collecting data. It's the proprietary algorithms that clean, deduplicate, and resolve identities into unified profiles, refined over nearly 2 decades. It's a true fortress.
And compliance actually helps them.
It entrenches them further. Smaller players often buckle under the legal costs and complexity of GDPR, CCPA. Zeta has the scale to manage it.
Plus economies of scale, lower cost per customer as they grow.
Inexorably drops. Processing 2.4 billion identities is fundamentally cheaper per unit than, say, 100 million. Their DSP cut ad delivery costs 15% in 2024, undercutting smaller rivals on efficiency, allows them better pricing or wider margins.
Which feeds into network effects. The platform gets smarter with more data.
Exactly. It's not static. Each new client's data enhances the AI models, improving personalization for all users. This attracts more clients, creating a powerful, self-reinforcing flywheel.
Like that retail client, improving models for everyone.
Demonstrably boosted conversion rates 10% across their whole client network. It's a loop that's incredibly hard for rivals to replicate without matching Zeta's foundational scale.
And the all-in-one platform is a countermove to specialized vendors.
Textbook counterpositioning. While others offer point solutions, just email, just analytics, Zeta provides the integrated CDP, ESP, DSP package.
Like that CPG brand saving 20% by consolidating.
Exactly. Simple, vastly more efficient, and a powerful selling point for large enterprises tired of juggling vendors and data silos.
And that integration leads to high switching costs, makes the business sticky.
Incredibly high. Migrating away from the ZMP is an operational nightmare for clients. It's deeply woven into their CRM, ad platforms, data architecture. The time, effort, costs are staggering.
That bank is making $5 million to switch.
Effectively lock them into their 5-year contract. This intrinsic stickiness creates that predictable, resilient revenue stream investors love.
Their brand isn't quite Salesforce level yet, but trust seems high.
Highly recognized within the industry. That 90% retention rate and partnerships with giants like Accenture speak volumes about reliability and value delivery. They also command premium pricing, often 30% above rivals like Braze, reflecting confidence in their integrated solution.
You mentioned cornered resources, unique assets.
Right. First, that unparalleled 2.4 billion identity database proprietary gold. Second, talent. Monberg and his 300 AI engineers give them a hiring edge, despite poaching attempts.
Patents too.
Over 50 patents on critical AI and data processing tech, legally protecting innovations. And finally, exclusive partnerships with Snowflake, LiveRamp, enhance capabilities and add more barriers.
And process power. Refined workflows.
It's not just static resources. They're AI-driven workflows refined over a decade, optimize campaigns 50% faster than manual methods. The AI Agent Studio automates 80% of campaign tasks, a process competitors can't easily match.
So the proprietary tech is the secret weapon. Faster personalization.
Truly. Their AI algorithms, trained on that colossal database, are an astonishing 10x faster at deep personalization than many legacy systems. Their CDP Plus processes 1 trillion data points daily. Mind-boggling scale.
Timing was also key. Founded in 2007, IPO in 2021.
Absolutely everything in business. They caught the data-driven marketing wave perfectly as digital ad spend exploded. The 2021 IPO timing, coinciding with a booming Martech market, allowed them to raise that $302 million to fuel growth. Strategic genius.
And they execute quickly, like a startup.
Remarkable agility. Launched AI Agent Studio in just 9 months, compared to competitors' 18 months for something similar. The Live Intent acquisition closed in just 6 months. That pace is tough for bureaucratic competitors to match.
How sustainable are these advantages, these moats?
The core moats, data, AI integration, are undeniably sustainable if they maintain continuous, robust R&D investment, which that 20% revenue allocation suggests they will. Partnerships and patents offer protection for the next 5-10 years.
But potential erosion is always a risk.
Always. New startups with breakthrough generative AI could disrupt if Zeta lags. Major tech shifts like quantum computing or decentralized data platforms pose long-term challenges. And competitor M&A like Salesforce buying a CDP rival could intensify competition significantly. Investors need to watch this constantly.
Okay, let's talk trajectory. Zeta's growth and resilience. This sounds like a story of bold ambition.
It really is, painted with vast potential and a demonstrable ability to not just weather storms but gain strength from them. Their growth strategy is multifaceted.
First, market penetration. Upselling existing clients.
Exactly. Methodically upselling new features like the AI Agent Studio. A major retailer added their DSP, increasing overall spend by 25%. Simple, effective growth from the base.
Second, market development. New regions.
Intensely focused here, strategically expanding into high-growth regions like Asia-Pacific, Latin America, where Martech spend is exploding at 15% annually.
Third, product development. That $100 million for generative AI.
Huge focus. Shows commitment to staying at the tip of the spear, investing heavily for those anticipated 2026 launches, pushing the boundaries of marketing tech.
And finally, acquisitions. Live Intent was key, more coming.
Core part of the playbook.
Yeah.
Live Intent added crucial publisher reach, expanded their identity graph. Whispers of more transformative deals are always circulating. It's how they accelerate.
So what's the untapped potential? New markets, new products.
Immense, targeting entirely new geographies like Asia, with its $200 billion digital ad spend, developing new product lines, maybe expanding AI Agent Studio specifically for the huge underserved SMB segment.
And game-changing M&A, like acquiring a CRM player.
Could literally double their total addressable market. Think Salesforce buying Tableau, it dramatically expanded their capabilities and share. While there are always risks competition, execution missteps, that consistent 40.3% growth speaks volumes about their current momentum.
Speaking of market size, that $500 billion TAM is staggering.
Almost defies comprehension. Break it down. CDP market $10 backs, growing 25% annually. DSP market 15%. Broader CRM Martech, 440 BADs, growing 10%. It's gargantuan.
And Zeta has 5-7% share now, potential for 10% by 2030.
With effective execution, absolutely.
Yeah.
Capturing an even larger slice of this immense pie is well within reach.
Which means diverse applications, diverse customers.
Platform is incredibly versatile. Powers marketing across retail, finance, automotive, ensures scalability. That healthcare client boosting patient engagement 20% shows adaptability. And there are still untapped niches, especially in SMBs.
You said they seem built to last. Why?
Their solutions aren't trendy, they're vital in today's digital landscape. High probability of relevance well into 2035 and beyond. Powerful secular trends are favoring them. Widespread AI adoption, evolving privacy laws, forcing adaptation, ongoing digital transformation.
Financial buffers help too. Cash reserves, subscription model.
Significant buffers, $364.4 million in cash. Predictable subscription model ensures survival and continued investment even during downturns.
Key drivers are AI adoption, ad spend growth, global expansion.
Crystal clear. AI adoption surging. 80% of marketers plan significant AI investments by 2027. Global ad spend projected to hit $1 trillion by 2030. Zeta's positioned to ride that wave. And expansion into Asia-Europe offers massive, untapped opportunities.
But let's be clear on the headwinds. Competition.
Fiercely intense. Adobe, Salesforce have broader portfolios, deeper pockets. Cannot underestimate them.
Market maturity in the U.S., economic downturns.
U.S. Martech market demands continuous innovation just to hold share. And yes, a severe downturn could shrink ad budgets 10-15%, impacting Zeta's top line, though their efficiency focus provides some mitigation.
Still, the overall picture seems positive. Growth strategy, resilient model.
Even with real risks, their strategic focus on growth penetration, development, innovation, M&A, coupled with that robust anti-fragile business model, paints a profoundly compelling picture of significant upward trajectory and resilience.
Okay, let's get down to brass tacks. Decoding the numbers, where the rubber meets the road for investors. Explosive growth, but still losses.
That's the headline. But digging deeper, the numbers signal immense underlying potential. Look at Q1 2025 financials, trailing 12 months, revenue at $1.08 billion. That's up a remarkable 40.3% year over year.
Driven by enterprise contracts and Lev intent.
Primarily, yes. Strong success securing those high-value deals, plus the immediate impact of the Live Intent acquisition broadening their network.
But net income is still negative, mega to $51.8 million.
Correct. But critically, these losses are narrowing significantly. They've shrunk from negative $100 million in 2023. That indicates a clear, accelerating path towards profitability.
Profit margin, Mega's 4.82%. Improving, but still negative compared to peers like HubSpot's 5%.
Exactly. It's visibly improving as Zeta achieves greater scale, reducing per unit costs. But yes, still negative for now.
But the free cash flow number is strong, $125.7 million.
This is where the numbers get truly compelling. It's a crucial indicator, vividly demonstrating underlying operational efficiency, provides ample funds for internal R&D, acquisitions, debt reduction, without needing dilutive equity offerings.
And plenty of cash on hand, $364.4 million.
Robust liquidity for continued growth initiatives and potential future acquisitions. A very healthy position.
What about debt? Often a worry for growth companies.
Debt to equity is highly manageable at 30.73%, comfortably below the industry average of 50%, partly thanks to CFO Griner's smart debt refinancing in 2023, saving that $10 million annually.
Return on equity is negative, but expected to improve.
Direct consequence of current growth stage losses. Expected to naturally improve as revenue scales and they pivot to sustained profitability.
What about the rule of 40%? How do they stack up?
It's a great SaaS benchmark growth rate plus profit margin. Sure. Zeta's around 35% right now, 40.3% growth minus 4.82% margin. Incredibly close to the 40% benchmark, signaling robust growth despite current strategic losses. HubSpot's around 45% for comparison.
In the price-sales ratio, 2.59, that seems really low.
Remarkably low, stunningly undervalued when compared to peers. HubSpot trades at 15 times sales, Braze at 10. This single metric, more than almost any other, strongly suggests significant potential undervaluation.
So comparing scorecards. Zeta's growth crushes peers, but margins lag. But that price sales.
Positively screams value. 40.3% growth eclipses HubSpot 25%, Braze 30%.
Yeah.
Yes, negative margin lags HubSpot's positive one, but that 2.59 price sales is an incredibly compelling point for investors seeking growth at a reasonable price.
What about the trends over time? Revenue climb, positive FCF?
Trajectory is clear and inspiring. Revenue climbed dramatically from $400 in 2020 to $1.08 in 2024. Free cash flow turned positive in 2023, hit that strong $125.07 in 2024, shows fundamental operational health. Losses consistently shrinking, break-even projected by 2026, decisively moving in the right financial direction.
You mentioned that story about the CFO turning a cash crunch into fuel for growth.
Fantastic illustration.
Yeah.
2023, post-Sysmex acquisition, facing a cash crunch. Grainer's team boldly cut operating costs 10%, but then shrewdly redirected those funds into accelerated AI R&D.
Which directly fueled 2024's growth spurt.
Turned a potential crisis into a springboard, like a master chef turning scraps into a Michelin star dish through financial brilliance and strategic foresight.
So, summing up the financials. Robust growth, strong cash flow generation, clear path to profit, despite current losses.
Unequivocally, compelling signals for you, the astute investor, seeking both growth and future value.
Which brings us to the ultimate question. Bargain or bubble? Hidden gem or inflated hype?
This is where analysis meets market reality. And what's fascinating is the potential margin of safety here. Buying below intrinsic value. It's like snagging that designer jacket at a thrift store. Incredible value for less than its true worth.
And Zeta's stock price is well below analyst targets. $14.18 versus $25.33.
A significant 44% below average analyst targets. That striking disparity offers a substantial potential safety net, suggesting considerable upside for you.
Why does valuation matter so much?
It's the critical compass. Separates winners from the less informed, tells you if the impressive growth justifies the current price or if it's overhyped speculation. Your essential guide.
How do we measure Zeta's value? DCF is tough with negative earnings.
It is challenging, but conservatively assuming 30% growth and hitting 5% margins by 2028, internal calculations suggest an intrinsic value around $20 per share. But for a growth stage company like Zeta,
relative valuation is key, comparing to peers.
Often the most insightful approach, and this is where Zeta shines like a beacon. That price sales of 2.59 is unbelievably low compared to HubSpot at 15x or Braze at 10x.
The disparity strongly suggests undervaluation.
Unequivocally. Look at other multiples too. Typical Martech M&A multiples average around 5 times sales. That implies a $5 billion valuation for Zeta based on current revenues significantly higher than its current $3.34 billion market cap. All relative signs point to a compelling, potentially undervalued opportunity.
Okay, let's hear the bull versus bear debate. The bear case.
Institutional bears focus on intense competition from Adobe, Salesforce deeper pockets, broader portfolios. Valid concern about lingering losses if R&D spending gets too high. Individual investor concerns sometimes echo profitability worries and Steinberg's centralized control.
Potential outcome if bears are right. Stock stagnates.
Could stagnate around $10 if growth slows or regulations tighten unexpectedly. That's the risk scenario.
Now the bull case. Institutional optimism.
Incredibly compelling. Major investment banks see massive 50% upside, citing that 40.3% growth, the $500 TAM. That low 2.59x sales valuation is widely considered an absolute steal.
Individual investors are bullish too. AI edge, high institutional ownership.
Consistently praise the AI edge, see high institutional ownership as strong, bullish signals on social media. Under this scenario, stock could realistically hit $25–30 by 2027 with sustained growth.
So what's the most probable scenario for investors to consider?
The bull thesis, supported by the weight of evidence, appears most probable right now. Zeta's growth trajectory, low valuation, AI leadership currently outweigh the known risks. Analyst targets and overall market sentiment support this.
And that current price of $14.18, 44% below the $25.33 target.
Undeniably signals a compelling opportunity for investors seeking that asymmetric upside. The math looks favorable.
Let's talk about what's happening right now. Current events, conversations shaping the narrative.
Crucial to understand the recent milestones. Scully's transition in June 2025 to advisory. Expected minimal immediate impact, but still monitor for succession clues. Q1 2025 earnings in May.
Strong results, beat estimates, stock jumped 5%.
Exactly. $264.42 midterm revenue, 36% YoY growth. Clear market approval signaled there.
And the AI Agent Studio launch in March.
Game-changing news. Rapid adoption by over 100 clients almost immediately signals very strong market demand, validates their AI innovation.
What should investors watch for next? Q2 earnings in August.
Definitely anticipate that report. Crucial to monitor revenue guidance for coming quarters, and critically, the continued adoption rates of the new AI tools. And keep an eye out for any M&A announcements, key part of their growth strategy.
What's the public pulse? Social media sentiment.
Insights from individual investors discussing Zeta as of June 2025 show predominantly positive sentiment, around 70% positive, 20% neutral, only 10% negative.
Positives highlighted are growth, valuation, AI excitement.
Consistently. That 36% YoY growth, the compelling 2.5x sales valuation viewed as a steal, and undeniable excitement around the AI agent studio.
Key concerns remain profitability and Steinberg's control.
Those are the recurring themes.
Yeah.
The Nuggets $51.08 net income, the concentrated control. But the dominant narrative is clear. Zeta is seen as high growth, potentially undervalued, strong AI leadership. Profitability remains the critical watch point for savvy investors, though.
Okay, let's unlock those core questions investors are asking first. Is marketing a winner-takes-all arena?
Not entirely, but exceptionally close. Those powerful network effects inherently favor data-rich platforms like Zeta. More clients mean better AI, which attracts more clients. It's a consolidating cycle.
But niche players can survive, so consolidating, not monopolistic.
Exactly. Niche players can still carve out profitable spaces. Zeta certainly has potential to grow from 5–7% share to maybe 10% by 2030, but Adobe and Salesforce remain formidable giants that can't be ignored.
Is Zeta truly the next generation of marketing?
Yes, absolutely, with necessary caveats. Their ZMP is a true innovator, unifying identity, intelligence, activation like few others. The AI Agent Studio, the 2.4B identity database, genuinely cutting edge.
But reaching Salesforce valuation requires flawless execution.
Paramount. To hit that $200 bid plus market cap, flawless execution across the board isn't just important, it's mandatory. The path is there, but demands near perfection.
And redefining brand connections in a privacy-first world, are they doing that?
Absolutely. This is critical. In a world rightly focused on privacy, Zeta's CDP Plus is a game changer. Masterfully leverages first-party data collected with consent to deliver personalized, effective campaigns while rigorously adhering to regulations.
Like that pet retailer boosting sales 15% compliantly.
Perfect real-world example. Boosting sales significantly while strictly adhering to privacy rules, building customer trust. That delicate balance of effectiveness and ethical data use, that's their secret sauce. And a huge differentiator as privacy concerns escalate globally.
So, key actionable insights for your portfolio.
First, that asymmetric opportunity. The incredibly low 2.59x PS multiple versus HubSpot's 15x strongly suggests a 50–100% potential upside if growth continues. Analyst targets around $25.33 support this optimistic view.
But be fully aware of the known risks: competition, regulations, succession.
Intense competition from Adobe Salesforce, hefty regulatory fines, GDPR CCPA, the inherent succession risk with Steinberg's control. Always factor those in.
And unknown uncertainties, future AI disruption, decentralized data.
Always potential long-term challenges from truly disruptive tech breakthroughs or new data paradigms, impossible to predict, but worth acknowledging.
What's the edge for an individual investor now?
Could be considering action before the Q2 earnings report. Strong guidance could significantly move the stock. Advise continuous, diligent monitoring of AI adoption rates and any new M&A rumors, critical indicators of their continued trajectory.
Zeta Global, a true maverick, a bold visionary in marketing tech, blending cutting-edge AI, unparalleled data, a clear vision to challenge the titans.
Their impressive 40.3% growth, that enormous $500 billion market opportunity, and a stock that appears undeniably undervalued make them truly compelling for you, the individual investor seeking growth and potential upside.
However, that formidable gauntlet, intense competition, regulatory hurdles, those lingering profitability gaps demands careful, considered assessment.
Ultimately, Zeta presents a high-risk, high-reward proposition. Think of it as a dynamic tech startup with the audacious ambition to either achieve monumental, industry-redefining success,
or perhaps fade into the ever-increasing digital noise. The question that truly lingers, the one worth billions, is this: will Zeta truly redefine the future of marketing, or will its grand vision get lost?
Only time and smart investing will tell.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.